A very good afternoon to you, great Cough learners. My name is Mr. Simbi, and welcome to today's accounting lesson. Today is a very special day because tomorrow we are writing our paper one. And I know you've been waiting in my class. I see a lot of people in my class today. I'm so excited. And I'm happy for the regular ones that have always been joining our Friday afternoon classes. And today I have new faces that are in my class. And once again, welcome. All right, what you're going to need today is you're going to need somewhere to write, you're going to need paper, you're going to need pen. There is a worksheet that has been circulated. You can find it even on your WhatsApp. Talk to your teacher. Your teacher must be having this worksheet. All right, so that when you have that worksheet, and then we can work together. My humble apologies, we delayed a bit with about 10 minutes because we had some technical glitches on our side. But I'm happy that you waited for me and I'm here now, so let's get the work going. Here are my objectives for paper one. Remember, today I'm doing paper one revision. So when you are doing paper one revision, it is very important that you know the structure of the paper. What comes into paper one? Very important. So I'm going to speak to the structure of the paper. And then in today's lesson, I'm going to focus on the statement of comprehensive income, the statement of financial position, the cash flow statement, and then analysis of financial information. There's other things that I cannot touch in today's lesson because of limited time. However, I want to encourage you that you continue studying in your own time even after today's lesson. So there are other things that I'll keep on highlighting on that are within the ATP that I may not cover today, but you still need to look into those topics as well. Okay, structure is very important. So when we are looking at the structure of our paper one, it comes with a number of variables. There are a number of ways in which the examiner can test our paper one. And then I'll show you the things that are constant. There are certain questions that remain constant, but others can be moved around. So in today's lesson, I'll show you how this paper can be brought across. So the first option is when you can have your statement of comprehensive income, that is your income statement, and joined together with the statement of financial position. And this normally takes plus minus 55 marks. And then your cash flow statement, you see this is an always there kind of question. And then your analysis of financial information, and then auditing and corporate governance. So you will see that the part that changes in most cases, the part that varies in most cases, is your question one over there. That is the part that may change. As you can see now, in our option 2, where you have the statement of financial position, you can see there is no statement of comprehensive income in this one. This is where you're just tested on the statement of financial position. This becomes our option number 2. But as you can see again, the cash flow and the financial indicators has remained constant. The analysis has remained constant, and then auditing and corporate governance have remained constant. This becomes option number 2. Let's look at option number 3. With the option number 3, this is where you can have the calculation of correct net profit after tax, and that can be coupled together with the statement of financial position. It can be an entire statement of financial position, or it can be either the equity or assets section. That becomes now option number 3. And again, your cash flow remains constant, analysis, and then the auditing. These, as you can see, they remain constant. And what is variable is that question 1. Okay, and then we're going to look now at the fourth option. In the fourth option, this is where you have the statement of comprehensive income and notes, and then these 3 remain constant again. So it is very important that you really know that the structure of your paper 1 can change on question 1, but question 2, question 3, and question 4, normally, according to the history of past papers, it has remained constant. So you can see that it is question 1 that can change. So in today's lesson, we are going to look into all the options that can be available. As I said, note the structure of question 2, 3, and 4 is predictable. In other words, it remains the same. It remains the same. But question 1 is the one that normally changes. And then, format. If you have been attending my lessons, I've been saying this over and over again. format is very key. You need to know it with your eyes closed, that if I ask you the statement of comprehensive income, you know how it goes. So format is of great importance. So as you can see here, this is the format of our statement of comprehensive income. And then here we have our operating section. And then we end up now with our operating profit or loss. All right. And then we end up now with our net profit after tax. Okay. And then the statement of financial position also, here is the equity and liabilities section. All right. That is, if you are expected to complete the income statement and the balance sheet in a question, record adjustment simultaneously on both statements. It is very important that when you are preparing your statements, you are able to do these statements simultaneously. So in the last slide that I just did, you were seeing the statement of financial position, where you start with your assets, your non-current and your current, and then you have your equity and liabilities. So it is very important that you know your formats. In today's class, I'm going to focus on certain adjustments, and I'm going to look at adjustments that can affect the statement of comprehensive income and the statement of financial position. Now, one of the technical glitches that I was talking about earlier on is my adding machine. Most of you who have been attending my classes do know that I always have a calculator that I bring to class. And today, it decided not to show up. So I don't have a calculator today. I'm going to rely on you. So I need you to have your calculators on the desk. I hear someone saying, Mr. Simbi, I don't have a calculator. You cannot get to this point of the game without a calculator. So you need to have your calculator that you're familiar with. You can't borrow a calculator the night before an exam. You need to have a calculator that you know how to go around it. In today's class, I won't use mine. I'm going to rely on your calculator. So I'm going to be asking figures, and please interact with me and give me certain figures. Okay, so the first adjustment, I'm going to look at the way in which our sales, cost of sales, and gross profit can be tested, and how that can affect the statement of financial position. Can I say that again? There are several ways in which an examiner can make adjustments onto sales, cost of sales, and the gross profit. And I want to explore those ways, that if an examiner is to test what are the options that are available, and then we see how it also affects the statement of financial position. Okay, so let's begin. This is an extract from the NSC May-June 2019. So, as we all know, the first thing when we're preparing our statement of comprehensive income is to open brackets. So I'm going to start here, and you're writing with me. I'm going to start here with my sales. Here is my bracket. And my sales is 10,563,280. And then I have my cost of sales. Here, cost of sales. And I open my bracket, and I have my 6,236,000, like that. Then I come to adjustment A, and it reads, a credit invoice. So once I hear a credit invoice, it simply means we sold goods on credit, all right, for 36,720. And this is an amount after deducting a 10% trade discount issued on 31 March 2019 was not recorded. And goods are marked up at 70% on cost. Okay, so it's very easy. You know by now that from your grade 10 and those that have been attending my lessons, that whenever you see an invoice that has not been recorded, you need to record your diskette. You need to record your diskette. That means you record under your debtors, under your sales, cost of sales, and trading stock. Now, you are given an invoice which is 36,720, but we are told this is an amount after deducting a 10% trade discount. So it means when I'm adjusting on my debtors control and on my sales, I would use the 36,720. 36,720. Okay, so what we're going to do, we're going to take a quick ad break, and then we continue. We're going to take 2-minute break, and I see you in 2 minutes.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinikanga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you are gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
And welcome back. Before the short break, we were busy doing the first adjustment. So if you're just joining us, I want to assure you that you did not miss on anything. And I'm going to make sure that I'm going to touch all the aspects that I've prepared to touch with you today. So please tell your friends that Mr. Simbi is back on and class is now continuing. You must be having your worksheet ready, and then we are going to do certain calculations together. Like I said earlier on, today my calculator is not working, so that was just a slight technical issue, but we're going to rely on each other. So make sure your adding machine is close to you. Make sure your calculator is very close to you, that we can do these calculations together. Okay, so let's do that. So the adjustment that I was reading was adjustment A. But before I read the adjustment, remember what I said, that whenever you get your information, you have to take your extracted information and then you put it already in your answer book. Like for instance, here you're going to start with your sales. So I'm going to come here, then I'm going to say sales. We'd already done that earlier on. That is my 10,563,280, like that. And then I'll bring also my cost of sales. My cost of sales, I open my bracket, that is my 6,236,000, like that. Okay, so I come now to adjustment A. How do I adjust this information? And remember what I say today, we need to touch the statement of comprehensive income and we need to touch the statement of financial position. If I say income statement and balance sheet, just know what I mean, okay? All right, let's read. It reads, a credit invoice. So the moment I hear invoice, it means we sold goods on credit. So I come to my invoice and I say the invoice was for 36,720. But this is after deducting a 10% trade discount. It was issued on 31 March, was not recorded. Remember, 31 March is the last day of the financial year, and that invoice was not recorded. Very important. Goods are marked up at 70% on cost. So what this therefore means is, like I said earlier on, if you have been in my class before, you would know that we always talk about our discount. All right? Our discount. That is our debtors, our sales, our cost of sales, and our trading stock. Now, our sales and the debtors, remember we have an invoice that we must record. Therefore, they are going to use 36,720. And then, when I come to my cost of sales and trading stock, we need an amount that we're going to use. But we are told here that there was a 10% trade discount that was deducted from this amount. Now, the biggest mistake you can ever do is to say 36,720, then you multiply by 100 over 170. That is not correct. Don't do that. Why? Because there was a trade discount that was allowed. So you need to know what was the initial intended selling price. That means we want the 100, all right, and we say over 90, then we multiply that by the 36,720. And this will then give us an amount. Remember, I said your calculators today, how much you get? You get 40,800. Good. Then that 40,800 was the originally intended selling price before we took out trade discount. Now, so that means if we're to calculate cost of sales, we have to come and say 40,800. Then we multiply that by 100 over 170. How do we get 170? Remember, cost is always 100%. Markup, in this case, is 70%. That means my selling price becomes 170. So what I have is 170. Let's punch that in the calculator. How much are you going to get? You get 24,000. So that means the cost of sales here is 24,000. Now, when it's a credit invoice that was not recorded, the signs must be plus, plus, plus and the minus. So I'm going to come here on my sales and I'm going to say sales plus how much? 36,720 plus 36,720. And then I come to my current assets, trade and other receivables. You must be able to do these calculations on the face of your statement of financial position. So I'm going to take my debtors control, which is 578,000. Then I add the 36,720 plus 36,720. I am done now with my D and my S. I'm going to come to my C, my cost of sales. On my cost of sales, I'm going to come and say plus how much? Plus 24,000. Plus 24,000. And where else do I go? I come to my inventory. So I say my trading stock is here. And I'm going to say inventory. I know I should have put it up there. I should have started with inventory up here, and then receivables are down here. Inventory is 364,200. And then we now say minus 24,000 because we have sold goods, yet that transaction was not recorded. So I then say minus 24,000. I have recorded transaction A. Let me go to B. With B, it says, the physical stock count on 31 March 2019 revealed the following on hand. So you can see that the adjustments in your statement of comprehensive income and the statement of financial position are clearly, nicely arranged. They are arranged in an orderly manner that you must do A before you do B. If you try to do B before you do A, you will not be able to get certain figures. So now we want to get our either trading stock surplus or trading stock deficit. So you are told that trading stock on hand is 334,500. One of the easiest way is to simply come here. If you have opened a note number 4, I want to show you, which is your inventory note, where you have your trading stock. You have the trading stock according to the books of the business, 364,200. And then we sold goods but did not record, minus 24,000. And then we are told, after we did a physical stock count, we realized that our stock is 334,500. Then I come here, 334,500. Now, you're going to come and say, which side is big? The one according to the records or the one on hand? And then you will realize that if one side is bigger, then you have a trading stock deficit or surplus. In this case, you will know that if you have to come and add, it's a trading stock surplus. But if you have to subtract, it's a trading stock deficit. In this case, you will find that the stock according to the business records is higher than the one on hand. That means on hand is less. Once your on hand is less, you're having a trading stock deficit. So here you have to come and say minus 5,700, minus 5,700, if you do it this way. So it simply means you're going to come here and now say that minus 5.7, it becomes an operating expense where you now have trading stock deficit. And the trading stock deficit is your 5,700. Remember, open brackets, and you bring these figures that I show you down here. Your trading stock deficit, 5.7. But when you come here now, you need to show. All right? You need to show. What do we show? Remember, you have to add your 334,500 and your 3.4. But already we know that we have a deficit here, which is how much? 5.7. So minus 5.7 here. All right? And then you come and you add your consumable stores on hand, which is your 3,400. And then you close your bracket here. So you can close this first one here. So I need you to have your calculators ready once more. It is your 10,563,280 plus your 36,720. That will give you how much? 10.6 million. 10,600,000. Like that here. And your cost of sales, I close my bracket here, it's going to give you 6,260,000. 6,260,000. That should give you now what we call gross profit. And my gross profit is how much? 4,340,000. Like that. Okay, and then we're not going to close this because we'll still have other adjustments. So this is one way in which an examiner can test the top part of a statement of comprehensive income and having the same adjustment being effected in your statement of financial position. But now we want to see what is the other option that can be available. Let's go and look at option number 2. Option number 2 is from the NSC November for the year 2023. And then we are given sales, which is 21,017,200. So where do I go? I start here. I say sales. All right. And then we're told the business uses a markup. So here we're not going to have any other adjustments. So I'm going to come here. I'm going to put my sales here. 21,017,200. Like that. And then I come and say minus cost of sales. I know that after this, I must get my gross profit. Now, adjustment number 1, it reads, the business uses a markup of 120% on cost of bicycles. Trade discounts amounting to 336 have been granted and recorded. So we want to see now, if we are given the sales amount, and yet we are told that trade discounts of that have been granted, what do we do? I need your calculators now. I need your calculators. You're going to now say your 21,017,200. You're going to come and add the trade discounts. How much are those trade discounts? 336,000. 336,000. And then you close the bracket. Okay? And then you close the bracket. And then whatever you get here, then remember you want to get what? Cost of sales. That means whatever you get here, then you multiply it by 100 over, remember, cost is always 100. And then your markup is 120. Therefore, your selling price becomes 220. So here you want 100 over 220. And then that will give you your cost of sales. I protruded here. And it will give you your 9 million. Say that figure again. 9,706,000. 9,706,000. Like that. And then you eventually have your gross profit. Your gross profit becomes 11,311,200. Like that. 11,311,200. That becomes your gross profit. This would be another option that an examiner can bring. Okay. And then I'm going to come to the last option. The last option now is a bit interesting because there's about 2 ways of doing the very same thing in the last option. And in the last option, I'm trying to bring in even financial indicators as well. Because remember, when you are preparing your statement of comprehensive income, statement of financial position, they can use financial indicators in completing these particular statements. So we come here. Our sales are not given. Sales, not given. Cost of sales. 2 question marks. Question mark. Question mark. And then information A then says, Paint PPE Limited operates on a 60% markup policy on all sales. Last year's sales amounted to 6.5 million. Okay. Paint PPE Limited is pleased to announce a 20% increase in sales for the year ending So last year, the sales were 6.5 million, like this. And we are told that there is going to be a 20% increase. That means we're going to multiply this by 120 over 100. You understand where we get the 120? We simply say 100% plus the increase of 20%. That gives you 120. Okay, so we say multiply by 120 over 100. And on your calculators, that is going to give you 7.8 million. Someone confirm? Yes, 7.8 million. So I'll come here, my sales is 7.8 million. But there was another way in which you could get the same sales amount, where you are told here, the following financial indicators were calculated on 28 February. Operating profit on sales is 15%. In other words, if we take our operating profit, we divide it by our sales, we multiply by 100 over 1, it will give us 15%, which therefore means if I take my operating profit of 1,170,000, I divide this by my sales, which is 7.8 million, I multiply by 100 over 1. Okay, remember, I don't have my sales as yet. So I don't have my sales. Because there were two ways that I want to show you. Then I'll say here, over sales. Over sales, it gives me my 15% here. Okay, so I want to get this sales amount. I want to get that sales amount. The easiest way would be simply to say, to get that sales, would be to say the 1,170,000, because sales in that case becomes 100%. 100% is sales. And 15% of sales gives you operating profit. That's what it means. And that operating profit is 1,170,000. So if you come here, you are now coming to say what you want is 100. And what you have is 15. You multiply that by your 1,170,000. And then you close your bracket like that. And that should give you 7.8 million. So this is the third way that I'm talking about today, in which one can still get their sales. And to get your cost of sales, you now say your 7.8 million, remember, what you want now is cost, and cost is 100%. And we're told here that markup is 60%. So what you want is 100 over 160. 100 over 160. On your calculators, please, how much do you get? 4,875,000. Thank you. 4,875,000 is what you then get. And then we end up with our gross profit. And our gross profit therefore becomes 1,170,000. 1,170,000. So I showed you about 3 options. There are a number of other ways in which we can calculate to get our sales, cost of sales, and gross profit. We're going to move on to the next adjustment. And I know some of you were saying, Mr. Simbi, please help me with the provision for bad debts. Well, let's look at it. Provision for bad debts adjustments. Provision for bad debts adjustments. With the provision for bad debts adjustments, here's the first one from the NSC November 2022. Let's go. So the first thing, we need to understand the information that we're given. Remember, you have reading time. Read the question paper. You read the question paper together with the answer book so that you can see information that you're supposed to transfer onto your answer book. And we are told here, 33,700 received from a debtor whose account was previously written off. as irrecoverable was posted in error to the debtor's control account. This must be corrected. I think this is one common adjustment. You see it in almost every paper, where a debt that was previously written off is then recovered, but is then incorrectly posted to the debtor's control account. What that simply means is we have our debtor's control, or you can say debtor's ledger. Remember, on the debit side it's a plus, on the credit side it's a minus. So if an amount that was previously written off, it means it was written off here as bad debt. That's what happened back in the past. We wrote it as a bad debt, 33,700. We subtracted it. And then that account was closed because the account could not be recovered anymore. Then this debtor then appears and he settles his account. You have to know that once that amount comes, it does not affect our debtor's control. It affects two accounts. It affects your bank. It affects your bank where you receive the money, and it affects your bad debts recovered, okay, which is income, which you increase on the credit side. And then you come here and say 33,700. And bank, CRJ, we are receiving 33,700. So, but this incompetent bookkeeper did not do this right thing. Instead, they came and they recorded this amount. They posted it to the debtor's control. So they came to the debtor's control and they said again another minus 33,700. You can see now that initially we subtracted the 33.7 as a bad debt. And now when the debt is recovered, this incompetent bookkeeper went to the same account and subtracted it again. That means now it's being subtracted twice. Is that correct? The first amount is correct, but the second one is wrong. So in order to correct this, we need to take this amount out of the debtor's control. And to take it out, you bring it onto the opposite side. That means you're going to debit it now. You come here, 33,700. So what we're coming to do is we come to our current assets, then we come to trade and other receivables, where we have our debtor's control. You have your 2,746,300. Then you now say plus 33,700. Give me a thumbs up. Good. We are correcting the error that was made by this incompetent bookkeeper. Now, after we have corrected the error, all right, and what do? Okay, so we have an amount as well, which is 33.7. What is this? This is an amount that we've received as bad debts recovered. Okay, so remember what we're doing here. We just want to correct the error only. We just want to correct the error. And then we then say the provision for bad debts must be adjusted to 3% of the debtor's control balance. I'll read it again. The provision for bad debts must be adjusted to 3% of the debtor's control balance. That means I need to come and say this plus that. Calculators, please. Calculators. How much do you get? If you say 2,746,300 plus 33.7, remember, I don't have a calculator today, so I'm relying on you. Say again the figure. How much you get? You get 2,780,000. Thank you. 2,780,000. 2,780,000. Then we need 3% of that. 3% of that. Can I see those adding machines again? How much you get? 83,400. Then I come and I bring that 83.4 here. Okay. The keywords, let me do this. The keywords that I was looking for is to. Once you hear the word to simply means you take me to the balance sheet, statement of financial position. So the to amount is 83.4. That goes straight into the statement of financial position, minus 83.4. you know we must record in the statement of comprehensive income. In the statement of comprehensive income, we record either an increase, which is an expense, or a decrease, which is income. We record one of two things. An increase is an expense. A decrease is income. But in order for us to get that, we need to compare. So we say, last year's provision. How much was last year's provision? 85,840. 85,840. How much is this year's provision? This year's provision is 83.4. 83.4. Then we get the difference. How much is that difference? 2,000, say it again, 2,440. Thank you. What is it? An increase or a decrease? A decrease. So if it's a decrease, it comes to other income. So I'm going to come here, then I'm going to say provision for bad debts adjustment. And here's my calculation. 85,840 minus 83,400. I close my bracket and I'm getting income of 2,440. Are we good? Okay, can I get a thumbs up? Thank you. Thank you. So here we did two things. We corrected an error that was made and we put it out of our debtors control account. We edited it here. All right? And then after that, we have a new debtors control balance. And with that new debtors control balance, then we calculate 3% of that figure. That therefore becomes our provision for bad debts. And once we hear 2, we take the 2 to the statement of financial position and we subtract it. And then we know in the statement of comprehensive income, I'm looking for either an increase or a decrease. So there has to be comparison. So I compared last year versus this year. Last year it was 85. This year it is 83. Once my provision goes down, to me, it's considered income. So it comes to other income. And I get my 2,440 there, like that. Okay. All right. Let's go on to the next one. All right. Thank you. I can see the thumbs up to say I'm answering some of your questions. That's good to hear. Let's go to the next adjustment. The next adjustment. There it is. Here's the next adjustment. And then it reads. So we're going to try and see if we can do the adjustments again as we did earlier on. It says, debtor S Magnum was declared insolvent. Insolvent simply means the debtor is no longer in a position to pay the account anymore because of several reasons. His estate paid 2,000, which was 20% of his debt. So we understand that his debt was 100%. His debt was 100%. In terms of rands, we don't know. But the moment he's declared insolvent, his estate then said, we can afford to give you 20% of the debt. At times, you can find the question coming to say, 20 cents in the rand. Aha, you've seen that one, isn't it? Yeah. Where it says, which was 20 cents in the rand. It's one thing, one and the same thing. 20%, 20 cents in the rand. Same thing. Okay? So the difference in that 20% is 2,000. That 20% is 2,000. Okay? We good? Then the difference. So our focus is on the difference. And the difference is what? 100 minus 20. Even I, without a calculator, I can get this one. It's 80. Okay? So, and we want to know how much is that in rands now? How much is that in rands? Okay, so simple method. Simple method. We've been using this method from January when we began our lessons. The UK method. What you want over what you have. Times what you have will give you what you want. Okay? Percentages over percentages times rands to give you rands. Can we go? Let's go. What we want is the 80. We want the 80. What we have is the 20. Multiply by 2,000. All right. How much is that going to give us? On your calculators, please. I'm waiting for you. 8,000. Thank you. Someone says 8,000, Mr. Simbi. I get 8,000 over here. 8,000. That is what is to be written off. So it means I'm going to come here and I'm going to say, I now have my bad debts. Open my bracket, 22.3. 22.3. Then I now say plus my 8,000. Plus my 8,000. Because this 8,000 must be adjusted into two places. Statement of comprehensive income, statement of financial position. The same 8,000 must go into two places. Statement of comprehensive income, statement of financial position. So I've adjusted it in my statement of comprehensive income. My bad debts have increased because a new debt has just been written off, 8,000. And then that simply means, therefore, I'll go to my trade and other receivables, where I bring my debtors control, 578,000. Then I'm going to say now, I don't expect to get that anymore because one of the debt must be written off. And we are told to focus on the difference, which must be written off. So I'm coming here to say minus 8,000. Minus 8,000. Okay. And then I'm going to go on to the next one. And then it then says 1,800 was received from a debtor, J. Misting. All right. 1,800 was received from a debtor, J. Misting, whose debt had previously been written off. The bookkeeper incorrectly credited the amount to the debtor's control account. Correct. We now know what to do with this one. Okay. So this one, we must record it firstly as bad debts recovered. So coming here, we have our bad debts recovered. Okay. We have our bad debts recovered. How much was that? 1.8. Bad debts recovered. And we know that this amount was credited. If you credit it in the debtor's control, you now know your debtor's control on the debit, it's a plus. On the credit, it's a minus. So if they credited in the debtor's control, they subtracted it. They said 1.8 here. And that is not correct. So to correct that, I come and then I say plus 1.8. I'm correcting that error. So I'll come and say plus 1.8. I'm correcting that error, plus 1.8. Okay. And then I then come and say on the last adjustment, adjust the provision for bad debts to. Adjust the provision for bad debts to. So I told you, once you hear the word to, you come and you say minus 28.5. 2. You take out the 2 as it is. And then I'm going to come now. I need to look for last year versus this year. How much was it last year? The provision for bad debts last year was 30,100. And this year, it is 28.5. Again, it is a decrease of 1,600. So if it's a decrease, it becomes provision for bad debts adjustment. And I'm coming to say 30,100 minus 28.5. And my income is 1,600 there, like that. Okay, so here I was just trying to show you how to record some of the adjustments that have to do with your statement of comprehensive income and the statement of financial position. Here we're doing the bad debts together with the provision for bad debt. Okay, so you have to know, you can be given one whereby it has increased. Once it has increased, you must record it under your operating expenses then. Okay. We're going to come to the next adjustment. The famous one, rent adjustment. I know someone was saying, I'm going to keep my fingers crossed. Let Mr. Simbi do a rent adjustment. Guess what? We're here now. rent adjustment, rent adjustment. Okay. We're going to show it in the statement of comprehensive income and in the statement of financial position. This is an extract from the NSC November 2024. And it reads, a tenant is renting an office from Ivory Park Limited. Rent for this office space has been received until 30 April. Timeline. You need to know your period. If it's ending on 29 February 2024, if it's ending then on 29 in 2024, that means it began on the 1st of March 2023. That is when it began. And then we're told that rent has been received until 30 April. So 30 April 2024. Rent has been received until 30 April 2024. So here is 12 months. So here we have March, April, another 2 months. So in total, we are dealing with 14 months. We're dealing with 14 months that the tenant has paid for. Now, we have a problem. We could have taken the 158,100 and divided by 14. But the problem is that the rent was decreased by 8%. The rent was decreased by 8%. It therefore means we had certain months where rent was constant at 100%. And would count that because remember, rent changed on the 1st of December. So it will be from March. In the exam, make sure you use your fingers. March, April, May, June, July, August, September, October, November. Do we count December? No. How many months is that? For 9 months, rent was 100%. That will give me 900 here. So remember here we need 14 months. You get what I'm saying? Okay, let's count from December. December, January, February, the year is supposed to end. Okay, February is supposed to end. Then we are told we received until April. February, then it becomes March, April. So how many months did we receive more? 5. 5 year is after the change, not more. 5 is the difference. So that if you say 9 plus 5 gives you the 14. What percentage is it? Because here it's 100%. It was 100% before it decreased, went down by 8%. So it means it was 100, it went down by 8, it's now 92. So we come here, it becomes 92. So it becomes 92 by 5. Calculators, please. 460. So it's 900 plus 460. That gives me 1,360. This 1,360 is equivalent to the amount that we've received, which is 158,100. Okay. Now, what do we want? Do we want the month with 100%? No. We want the month of March and April. March and April, we're paying what? 92% because rent had decreased. So what we want is 92 for how many months? For 2 months, which gives you 184. So we want 184. What we have is the 1360. Then we multiply that by 158,100. I need that adding machine. I need that adding machine. How much you gonna get? Say it again, 21,390. Then you get 21,390. So I'm gonna come here under my other income. Then I'm gonna say rent income, I open my bracket. And then I'm gonna say 158,100. Then I have income received in advance. So I must subtract it. Remember, it must go to the income statement together with the. So I'm going to come here and say minus. Minus what? 21,390. I close my bracket. How much am I going to get now? Okay, I'm going to end up with 136,710. And then if we received income in advance, is it receivable or payable? It is payable. So that means I come to my current liabilities. trade and other payables. I open my bracket. Okay, and then I'm going to say, how much? 21,390. You have to know that the examiner can play around with any of these, as we see how last year's examiner did. Last year's examiner brought a rent that had decreased. And you can see all the past papers, our rent had been increasing. But last year we had a decrease. Okay, so it is very important also to know that in this case, we're dealing with income received in advance. But you can also have accrued income. You can also have accrued income. Can I show you? Accrued income simply means for your 100%, you have 9 months. And for your 92%, maybe you only have 2 months. That means you end up with 11. 1 month is accrued. So the examiner can play around with any of these. Are we together? So I am trying to say you should be able to practice with your rent adjustments and find out different ways in which this can be tested. I have another rent adjustment again here with me. Let's see if we can do it together. Rent income 183.6. A tenant has been leasing office space on the premises since March 2020. That is way back in the past, 2020. She has been paid rent until 30 April 2022. Okay, timeline again. So it begins in March of which year? 2021, and it ends in February of which year? 2022. We're still together. Beautiful. And then we are told rent has been paid until 30 April. 30 April 2022. We understand? 12 months here. And then February, March, April, 2 months. So we are dealing again with 14 months. Similar. 14 months again. Okay. So if that is the case, let's see. Note that the monthly amount was reduced by 1,350 with effect from the 1st of January. So I could have taken this and divided by 14. Would that be right? No, because rent was not consistent. Rent got reduced by 1,350. So what do? I now know the decrease in rent is 1,350. And the decrease was for how many months? January, February, March, April. For 4 months, it decreased. How much was the decrease? 5,400. So what do? I then come to my amount here and say 183,600. Let me add that amount that it was decreased by 5,400. And it gives me how much? You guys have the calculators. Help me out here. 189,000. Thank you. 189,000. Okay, so what we did, we took the rent in the trial balance, and then we realized that it was decreased for how many months? For 4 months. And we add that decrease back now. So once we get the 189,000, then we can divide by 14 now. We can divide by 14, and that is going to give me 13,500. The 13.5, that becomes my rent per month before the decrease. This is before the decrease. And then I know that these months, April and March, we received them after the decrease. So let's decrease this. By how much? By 1,350. 1,350. And then, how much do we then get? Okay, we end up with 12,150. This is rent per month after decrease. And then, what is our problem? There's 2 months, March and April. We multiply that by 2. How much do we then end up with? 24,300. Okay, so I must adjust this in my income statement as well as in my balance sheet. Let's go to my income statement. Statement of comprehensive income. Then what do I say? Rent income. Rent income. I open my bracket. I have my 183,600. What else do? I know I have received income in advance. So what do? I come and I subtract it, 24.3. What if it was accrued? What if we received for 11 months? I would have had to come and add if it was accrued. If we had received for 11 or for 10 or for 9 months, then we must add it. But in this case, we received for 14. So it's income received in advance. So we subtract that amount. Again, we have received income in advance. So that means we take it to current liabilities, trade and other payables. I come here and I get my 24,300 rands. We good? Oh, beautiful, beautiful. Can I move on to the next adjustment? Let's do so. The next one is director's fees. Director's fees. Okay, director's fees. Here we go. So this is a common adjustment. You can pick any past exam paper. The adjustments that I'm dealing with here, these are adjustments that come in any paper that you can pick. Just take papers, throw them at random, close your eyes. You pick a paper with a rent adjustment, director's fees adjustment, sales, cost of sales adjustment. So these are common adjustments. I'm just trying to show you different ways of calculating these common adjustments. Okay, so director's fees. Let's hear what it says now. Okay, it says, the company had 2 directors who received a combined annual fee of 1,065,200 after their monthly fees were increased by 5.8 each on the 1st of August. A third director joined the company on the 1st of November 2023 and received the same monthly fee as the other directors, excluding the increase of 5.8 per month. Well, this adjustment wants us to take it nice and slow. Calm, nowhere to rush. Okay, let's do it nicely. So, we have 1,065,200. And then we are told that we have 2 directors. 1 director, 2 director. Okay? They receive a combined annual fee. After their monthly fees were increased by 5.8 each on the 1st of, so that means if I can deal with this increase, if I can take out this increase, I can get what they were getting before the increase. And I am told that each one got an increase of 5.8. So this guy got an increase of 5.8. This guy got an increase of 5.8. In total, these guys, the 2 of them, got an increase of 11.6. And for how many months was this? We are told that on the 1st of August. Oh, timeline. So if my financial year is ending in February, it ends in Feb. Remember, it begins in March. So if it changed on the 1st of August, on 1 August, it changed. That means I'm counting from August, September, October, November, December, January, February. For 7 months, these guys received and enjoyed the increase. So I'll come here, then I'll say 7. So 5.8 for 1 director, 5.8 for the other director, the 2 of them 11.6, and they got that for 7 months. How much is that going to give us? That should give us how much? 81,200. So this is the increase in the director's fees for this 7 months, for the 2 of them. So it means if I come here, let's say, if I come here and I take out that 81,200, I should get my director's fees without an increase. How much is that? 984,000. This now is director's fees without an increase. For how many guys? Director 1, director 2. 12 months for 1 director, 12 months for 1 director. That means for 24 months for the 2 of them. So it means if I come here and I divide this by 24 months, I can know now how much each director is getting per month before they get their increase. So I'm going to say 984 divide by 24. All right. And then how much is that going to give you? That should give you 41,000. So 41,000 becomes the director's fees per director before it increased. Now we are told a third director, here's the new guy. A third director joined the company on 1 November 2023 and received the same monthly fees as the other directors, but without the increase of 5.8. So it simply means this new guy is just going to be getting how much? 41,000. And when was he employed? 1st of November. November, December, January, February. So we had this guy for 4 months. How much did we pay him in total? So it's going to be 41 times 4. That's going to give us 164,000. So it simply means my director's fees for the year is going to be director's fees. It is what we have paid for these two guys with their increase, 1,065,200. Then I add the third director who has received 164,000. And then I close the bracket. I should get my 1,229,200. And we are done. We are done. We are done. Okay. There were no accruals. There was no prepayments. They were just calculating the director's fees. Flat on. Okay. Next one. Let's do that. Okay. NSC November 2023. It reads, provide for the director's fees owed. Aha. So I know I have an accrued expense. Director's fees owed. Let's hear what it says. The company's two directors, okay, one director, two directors, Brenda and Johan, have been employed since 2020, way back in the past. Brenda earns 10,000 more than Johan. Brenda earns 10,000 per month more than Johan, but she has not been paid for February. Hence, there is fees that are owing. Okay? So, it simply means we have paid Brenda for 11 months. How do I get 11? It's simple. If we're paid for 12 months, we'll not be owing. But we're told here we owe for 1 month. So it's 11. So we have not paid for February. Hence 11. You get that now. Okay, let's go to Johan. Johan took unpaid leave for the last 3 months. So that means Johan out of the 12 months took 3, so 9 months. We good? Okay. In total, we paid these guys for 20 months. That's what it means. Okay. Now, can I come and divide this by 20? No. Because Brenda earns 10,000 per month more than Johan. So you need to level up the playing field before you can divide by 20, Mr. Simbi. True? Yes, it is. Now, how do I do that? I'll now say, if Brenda earns 10,000 per month more, so it's my 10,000, and for how many months have we paid Brenda? 11 months times 11. 10 times 11, 10,000, not just 10. 10,000 times 11, that gives me 110. 110,000. So I'm going to come in now say, my director's fees of 1,610,000. Let me take out the amount that Brenda is getting more than your one, so that they all end up on the same amount. So I'll come in and say minus 110,000. How much am I going to get? I'm going to end up now with 1.5 million. Now, with this 1.5 million, I'll then say 1.5 million. This is when all the directors, the two of them, are getting equal directors' fees. Then I divide that by 20, the 20 months. And once I do that, I realize that each director is getting 75,000 per month before Brenda gets more. So that simply means Johan is getting 75,000 per month. So, do we have a problem with Johan? No. Johan is good because he took 3 months unpaid leave. We don't owe him nothing. It is Brenda here that we have not paid for February. So it means Brenda does not get the same as Johan. We know Johan is getting how much? 75. But Brenda earns 10,000 more. So it's going to be 75 plus 10. That gives us 85,000. Like that. So I must come now and adjust this in the statement of comprehensive income in the balance sheet. I'm going to come here and I'm operating expenses. Then I say director's fees. And I'm going to now say 1,610,000. Then I know that we owe who? Brenda. And Brenda earns how much? 85,000. So we give Brenda 85,000. That's an accrued expense. And I know that once I have an accrued expense, we were told here, fees are owed. That's a liability. Where does it go? Trade and other payables. So I come here, then I say, under my trade and other payables, 85,000. The ability to make adjustments in the statement of comprehensive income, statement of financial position must be in your fingertips. You must be ready to do that at any point. We can go on. Okay, let's do so. Okay, let's do one more adjustment before we leave our director's fees. Is that okay? Okay, let's do one more. Here, it reads May, June 2023. The company has 2 directors who were appointed in 2019. Again, it's in the past. A 3rd director was appointed. Okay, someone is saying, Mr. Simbi, we want to see the directors. Here they are. Here are your directors. 2 directors appointed in 2019, way back. A 3rd director, here's the 3rd director, was appointed on the 1st of October 2022. Remember, the financial year begins on the 1st of March 2022. It ends in February 2023. We still okay? Good. And then we are told a 3rd director was appointed on the 1st of October. Okay, let's keep going. The directors all earn the same monthly fee. The director's fees paid during the financial year have been recorded, but one director has already been paid for March and April. Okay, so under normal circumstances, director number 1 must get 12 months. Director number 2, 12 months. Hence, they told us appointed in 2019. They're simply trying to tell us when the financial year began, these guys were there already. So they gave us a date in 2019. They could have said 2016 or 2017 or 2012. They're simply trying to tell us these guys were there already in the past. Now, the new guy, he came in on the 1st of October. So it means we now count from when? October, November, December, January, February. How many months we got? 5 months. But then we are told one of these directors has been paid for March and April, 2 more months in advance. So we come in, then we say this guy plus 2. So he now has 14. So it's 14 plus 12 plus 5. So in other words, if you do that, that's 26 plus 5. That's 31 in total. We've paid directors' fees for 31 months. We were supposed to pay for 29. 12 plus 12, 24. Plus 5, 29. But we paid 2 months more to make them 31 months. Now, we have not been told if one director gets more than the other. So we're going to come in and we're going to say the 2,015,000 now, we can divide that by 31 months. 2,015,000. We can divide that by 31 because none of them is getting higher than the other one. They're all on the same level. So we can divide by 31. All right? And then if we do that, calculators, please, calculators, how much you get? 65,000. Thank you. 65,000 per director per month. 65,000 per director per month times. What is our problem? 2 months. We paid 2 months in advance. 65 times 2. How much do we get? 130,000. 130,000. What is that? That is our prepaid expense. Income statement, balance sheet. Prepaid expense. So we come here, we say director's fees. And then it's 2,015,000. What do? Do I add or subtract? I paid an expense in advance. Subtract. Minus how much? 130,000. Where do I go? Current assets. Under my current assets, what do I say? Trade and other receivables. We have prepaid an expense. Therefore, it is a receivable. How much is that going to be? That is going to be 130,000. Like that. Okay. My good friends, we've come to the end of the director's fees adjustment. Don't worry, not the end of the lesson. I'm still here. All right, we're going to do another one. Salaries, 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 salaries. Let's do salaries adjustment. Okay, let's go. It reads, one employee was omitted from the salaries journal. Already, once I hear the word omitted, in my mind, I know I must go and add, because an employee was omitted from the salaries journal. His net monthly salary was 19,340. That was his net monthly salary. After 35% deductions were made for his pension and personal tax, and 2,500 for medical aid. So the paragraph here, the English here is so very English that if you don't get it nicely, it can throw you off the bicycle. Let's see. We must get what we call gross salary, okay? And we don't know that in rands. But we know that we must subtract what we call deductions, okay? And our deductions, we are not given the rands, but we are told we have deductions of 35% here. And the 35%, this is for pension and personal tax. And there is also another deduction again of medical aid. And that medical aid deduction has been given a rand value of 2.5. Okay? And then after that, then you get your net salary of 19,340. 19,340. So, in the statement of comprehensive income, if you've been attending my lessons, you know we record the gross. So that we come here and then we say salaries and wages. I open my bracket. I get my 1,425,600. I need to come and add my gross first. Then I go to my contributions so that I don't confuse things. How do I get my gross here? My gross, remember, gross minus my deductions will give me my net. So if I can group my like terms here, I can simply then say my 19,340, okay? And then I add back this 2.5 plus the 2.5. This would give me my 21,840, like that. Then when I get my 21,840, I now know that this is now 65% because the only deduction that I'm left with is the 35%, which I've not been told. So I know that my gross is 100%. So if I am to come out then say this 21,840 would be my net if I add back the medical aid. All right? But in order not to bring confusion, I'll simply call this my 65%. So what I want then is the 100, which is the gross. And what I have is the 65%. Then I multiply this by my 21,840. And then that will give me my 33,600, which becomes my gross salary. So I'll come in, then I'll say plus 33.6, which is my gross. So the trick was just in the English that you had to add this 2.5 back to your net so that you can be able to now say what you want over what you have times what you have to give you what you want. Then you bring the 33.6 over there. And then once you're done with that, you have to now bring your contributions. And the contributions are 10% of gross. That means it's going to be 33,600 multiplied by 10%, which gives me 3,360. So I'll come in, then I'll say plus 3,360. And then I close my bracket. That is how I would do this salaries adjustment. Let's continue. The next adjustment has to do again with salaries. And in this one, this is a much simpler one for May, June 2021. Because with this one, we can simply get our gross. Like I said, your gross is 100%. Your gross is 100%. Okay? So what we want in this case is 100. So if my gross is 100, my deductions is 30. That means my net is 70%. So what I want is 100. What I have is 70 multiplied by 23,800. And that should give me 34,000 like that. So I'll come here and then I'll say my salaries and wages. I open my bracket and I have my 6,425,000. 6,425,000. Then I'll come and I'll say plus my gross. I always add my gross. Plus my gross, which is 34,000. I add my gross, which is 34,000. And then I bring my contribution. The employer's contributions are debited to the salaries and wages. So I come and I add my contributions of 4.5 there. That would be the last salaries adjustment. Let me go to the next one. The next one is now how to transfer a debtor's balance to the creditor's accounts. The transfer of debtor's balance adjustment. The first one, November 2023, and it reads, transfer a debtor's debit balance. Let's do it practically. We are accountants. That means I must have my debtor's ledger here. Okay? All right. Let me put it somewhere where I can show you neatly. Not there in the corner. Let's bring it here then. Okay. Aha. Here's my debtor's ledger. Debtors, assets. So on the debit side is a plus. On the credit side, it's a minus. Debtor. Transfer a debtor's debit balance. All right. And then here I'm going to transfer it to the creditor's ledger. Creditor liability. On the credit side, it's a plus. On the debit side, that's a minus. Okay. So we're told there's a debtor's debit balance. A debtor's debit balance. A debtor's debit balance of 2.7. A debtor's debit balance of 2.7. We want to transfer that, okay, to the creditor's ledger. So if we're to transfer it, it means we must take it out of the debit side. And the only way we can take it out of the debit side is by putting it on the credit side. That means I'm going to bring it here and say 2.7. And to complete our entry, I'm going to bring that one now on to the debit side here, 2.7 also. Now, what is key are the signs, that sign and that sign. Those two signs. That in the debtor's control, I subtracted. That means I'll come to my trade and other receivables under my current assets. And I'll say my debtor's control, 483,100. 483,110. What do? I minus 2,700. Then where do I go? Current liabilities, trade and other payables. Creditor's control, 523,890. 523,890. 3,890. What do? I minus again, because when I debit the creditor's ledger, 2.7, it's a negative. So it's a minus minus. It will never be a minus and a plus, or a plus and a minus. It will always be a minus minus. Plus plus. I'm going to do a plus plus with you so that you can see. Once again, if you've been attending my classes, this is easy, a walk in the park. Okay, so what we're trying to say here is, first, if you're given such an adjustment, see where it was. Transfer a debtor's debit, balance. To transfer it, we must first bring it to the credit side. Therefore, to complete double entry, another account to debit, 2.7 there. So the signs are key. Minus, minus. The credit side of the debtors is a minus. The debit side of the creditors is a minus. Hence, you see, minus 2.7, minus 2.7. I know your mind is like, no. It's a minus, my good friend. Let's go to the next one. Oh, another one, similar. It says, debtors with credit balances. Okay, let's bring again our good friend. Welcome back. So, debtors ledger, debit is a plus. You remember? Debit is a plus. Credit is a minus. Creditors ledger, credit is a plus. Debit is a minus. Correct. Debtors with credit balances. Debtors with credit balances. 11,000. Must be transferred to the creditor's ledger. So the transferring means you are shifting it from one place to the other place. You're transferring it. So I'm going to move this amount, which is on the credit side. To transfer it means I'm going to move it from the credit to the debit, and then I complete double entry. Transfer. So I'm going to bring it here. 11,000. I've transferred it. On your calculator, if you say minus 11,000 plus 11,000, you get a 0. That means we've taken that amount out. We've transferred it from the debtor's ledger on to the creditor's ledger. So what I did, I came here and I have that figure there. And I'm going to come here and I'm going to now say 11,000 over there like that. So that is what we end up with. So I'm going to come here under my current assets. It's going to be trade and other receivables. All right. Debtors, I'm going to open bracket. That's 3,668,810. And what sign is that? It's a plus 11,000. And I'm going to come to my trade and other payables. And then what do I have? Creditors control. 1,253,000. What sign do I have? Plus 11,000. So it becomes plus plus. There's no minus there. It's a plus plus. Don't ever be tempted to say, since I said plus, let me go and say minus. Now, my friend, it's a plus plus, or it's a minus minus. Okay, I see you're smiling. That means I can move on. On to the next one. Let me move on to the next one. The next one is an income tax adjustment. Okay. So with the income tax adjustment, it's very important that you read the information, understand, comprehend the information. It says, the correct net profit after all adjustments. The correct net profit after all adjustments is 2,534,400. So that means net profit after. So here I'm coming here, net profit after tax. After tax, 2,534,400. Okay, and then here I get my income tax. Income tax is calculated at 28%. 28% in brackets. Then I get my net profit before tax. That is 100. 100 minus 28 gives you 72. Now, what we want to get is the income tax over there. To get that, it's very easy. What you want is 28. What you have is 72. You multiply that by 2,534,400. Like that, you close bracket. You have your calculator, right? Let's see how much you get. You're saying 28 over 72. What you want over what you have. multiply by 2,534,400. You get how much? 985,000. Say it again. 985,600. 985,600 in bracket. And then when you go up, you flip the sign. You do opposite of the second figure. Oh, how I wish my calculator was here so I could show you. Okay, so we're going to say the 2,534,400. Then we add the 985,600. We have to add the 985,600. Then you end up with your 3,520,000. 3,520,000 like that. Good. Now, you have to know that in your extract, you are given provisional tax payments. So far, we have made provisional tax payments of 972. But our income tax for the year is 985. So we have already paid 972. 972 is what we have already paid. But we should have paid 985, 600. That simply means we must still pay SARS. How much is the difference? 13,600. So still to pay. That means it's a liability. So we come here, then we say SARS income tax. SARS income tax. That is my 13,600. That's a current liability. So at times the examiner will come and say 13,600 must still be paid to SARS. An examiner can say that. All right. So if the examiner is saying that and you're preparing your statement of comprehensive income, you are simply being told to say the 972,000 that you've already paid, you must still pay 13,600. Therefore, it means your income tax for the year therefore becomes 985,600. You add the must still be paid if you're doing the statement of comprehensive income. And if you come to the statement of financial position, the must still be paid becomes your current liability. Several ways in which this can be tested once again. Okay, let's go to the next one. And then the next one is May, June 2021. May, June 2021. Okay, so the question, the information reads, the assessment from SARS indicated total income tax for the financial year as 351,000 after all adjustments had been made. After all adjustments had been made. Okay, so it means therefore that when I come here, I need to record my income tax. The assessment indicated 351. So here is my net profit before tax. Income tax must be in bracket. Here I get my net profit after tax. And I'm being told that the tax assessment indicates 351. All right, so that means I'm coming here, then I'm going to bring my 351,000 over here. And then I had made provisional payments of 322,800. So I made less provisional payments. So it is payable again. So I come to my current liabilities. Then I have my SARS, Mr. Simbi, income tax. And then I open my bracket. What do I say? I say 351,000 minus 322,800, close bracket. And then I end up with 28,200. That is my SARS income tax. And then I come to, what do I do, Mr. Simbi, if I see financial indicators? Like so far, I've shown you one financial indicator. You know which one? Operating expenses on sales. But there are several financial indicators which can be brought in the financial statements. And I'm going to look at some financial indicators which can be used in the statement of financial position. I'm going to look at one Can I give you homework? I can give you homework, isn't it? Okay, so I'm going to do the debt equity. Then I'm going to ask you that you do the NAV at home. Okay, you do the NAV in your own space. Okay, in your own space, do the NAV. Okay, so here we're told interim dividends, final dividends. I know once I see my final dividends due, that is my shareholders for dividend. So I can bring it here. Shareholders for dividends. That's my final dividends. Whether I've prepared note 8 or it's given to me like this. 2,640,000. Like that. Okay. Now, the debt equity ratio on 28 February is 0.2 as to 1. Now, financial indicators formula is very, very important. You need to know it. It has to be in your fingertips. You need to know your formulas. Of course, the formula sheet is attached, but you cannot over rely on the formula sheet because the names are not attached there. So you need to know it offhand that if it says debt equity, you know my formula is my non-current liabilities as to my shareholders' equity. This is not something that you do the night before an exam. No. This is something that you train yourself every day, and you keep doing it until it flows in your blood. If you have a challenge with this one, after the exams, make sure you polish your financial indicators, that you know your formulas perfectly well. So it is your non-current liabilities as to shareholders' equity. And what do we have here? We have our non-current liabilities, which is our 4,512,550. S2, shareholders' equity we don't have. And then we are told it is 0.2 S to 1. What do I do here? I cross multiply. That simply means I now have 4,512,550 as to 0.2 shareholders equity. Okay? The next guys are saying, Mr. Simbi, be careful. Then I come here, I divide by 0.2. Okay? Then I end up now on my calculator with how much? 22 million, say it again, 22,562,500. Okay, so I come here on my shoulders equity, I'm going to get my 22,562,500, like this here. So this debt equity assisted me to get my shareholders equity here. And then I can then get my retained income. Which I get by subtracting 22,562,500 minus 20 million. I close my bracket. Then I end up with 2,562,500. And finito. It is finished here. Okay, that is how I would use this financial indicator. Homework. I know you have a lot to study tonight and just polish, but do check the NAV, please, before you call it a night. How can you use the NAV to complete the statement of financial position? I'm going to quickly come now to the cash flow statement. Yeah, someone was saying, you've taken enough time, Mr. Simbi, on the statement of comprehensive income and the statement of financial position. Let's take a break and let's go to the cash flow statement. So we're going to do that. We're going to take exactly 1 minute. 1 minute. 1 minute. Just make sure you change your sitting position. Exactly 1 minute. Exactly 1 minute. I'm back here and I'm doing the cash flow statement. See you in 1 minute. Welcome back. Welcome back, dear learners. Well, I said 1 minute and I kept my word. I'm back here. Thank you for attending today's lesson. It means a lot to me having you in my class, and I wish this continues until we write our prelim. Eventually, we write our final exam. So let's keep this one. Let it not be a culture that you join only before an exam, but let it be that you join classes every Friday. 2:30, I'm here, and then we can continue working. Cash flow statement. Here it is. Format. I cannot overemphasize the need to know format. Misplacement of things is so frustrating. You can ask your teacher. If you write the wrong things in the wrong place, it's not on. Know your format. Know what to record where. And do not place things in the wrong places. And then this is the format of the note. Okay. In this case, we're going to quickly do the note. All right. We're going to quickly do this note. And this note is from our own paper here in Gauteng. So let's do it. All right, it reads, the information was extracted from the records of Severance Limited. The financial year ends on 28th February, the year 2022. Information extracted from the statement of comprehensive income on February 2022. All right, net profit before tax. I've shown you how to get this one. So if your income tax is 28%, you know your before tax is always 100. What you want is 100. Oh, I must write it again on the side. Okay. Net profit before tax is always 100. Income tax, in this case, was 28%. Net profit after tax becomes 72%. So what we're given is income tax, but what we want is net profit before tax. Before tax, that's 100. So we want 100 and we have 28. We multiply this by 2,072,000. Let me see you hitting those adding machines. Let's go. How much we got? 7.4 million. 7,400,000. Then we go. The next one is depreciation. This is easy. We just add our depreciation. How much is that depreciation? 320,000. There you go. 320,000. What is the next one? We add our interest, which is 219,000. 219,700. Calculators, please. Let's be quick. We are behind time. 7,939,700. 7,939,700. We good? Okay. Let's go on to the next one. So once we get this one, we then come to the exciting part of increase, decrease, changes, and all of that. I have a simple formula. Oh, how I wish my calculator was here so I could show you. Okay, so I have a simple formula, and I want you to do that on your calculators that side, okay? And then we have inventories, we have receivables, and we have payables. And then assets, liabilities. This is called the calculator method. So as I said, make sure you punch it on your calculator and then you tell me what you see. Inventory is an asset. On your assets, always say previous year. Previous year is 2021, previous year. Minus current year, where we are now, 2022. That's the current year, okay? And so we're going to say on inventories, I come here, then I open my bracket, and then I'm going to say previous, how much is my inventory in the previous year? 110, 250, 110,000, 250. Previous minus current. Current is 561, 880. I close my bracket. On your calculator, what does it give you? If you practically punch in what I'm telling you now, you say 110,250. Yes, then say minus 561,880. On your calculator, what do you get? Yes, you get 451,630, but that's not what I only want. I want the sign in front of the figure. Yes, it's a negative. That means you bring a bracket. Outflow. So you're going to end up with 451,630. That's a cash outflow. A negative figure means a cash outflow. Let's go and do that again with our receivables. So we were here and we had our 451,630. Let's come to do trade and other receivables. So to do our trade and other receivables, we're going to say previous, current. All right. So with trade and other receivables, for our previous year, we're going to do calculations here. For our previous year, we're going to take figures and we're going to say 342,000, and we're going to add our accrued income, 81,000. 342 plus 81. 342 plus 81. That is going to give you 423,000. That's my previous. Minus my current year. My current year, I'm going to take again the same, which is my 1,279,400. And then I add my 48,000, which is my accrued income again. And then that is going to give me 1,327,400. Now, let's come and put it here now. I'm going to say now, in my brackets, I want previous minus current. Previous, it's 423,000 minus the 1,327,400. Please punch them in the calculator the way I have written them in the book to say this is my previous and this is my current. How much do you get on your calculator? 904,400. Again, I just don't want the figure. I want the sign as well. What sign you got? A negative. So it becomes a negative 904,400 in bracket. Let's do the last one now. Creditors. So with my creditors, it's liabilities now. So I'm going to say current minus previous. All right. So I'm going to come here with my trade and other payables. Trade and other payables. I'm going to say current minus previous. My current, I'm going to take my 770,000. I'm going to add my 9,000, which is accrued expense. 9,000. I'm going to add my income received in advance, 5.4 plus 5.4. And then in total, how much is that going to give me? It's 770 plus 9 plus 5.4. So it gives you 784,400. 784,400. In my previous year is 338 there. 338,000. It's 8.7 there. 8,700. It's 6,200 there. 6,200. I add everything. And that's going to give me 352,900. So I come here. In my payables, I'm now going to say it is my current, which is 784,400 minus 352,900. And then, is it a positive or a negative? It is a positive. How much? 431,500. A positive figure. Yes, that's what I wanted to hear. A positive figure. And then you close that up and then you give me that figure there. You have the calculator. How much are you going to get? 7,015,170. Like that. And then we finished off like that. Once you're done there, you take your figure and then that you bring to your cash generated from operations over there. Therefore, we come then we say 7,015,170. And then you continue with your cash flow statement. I'm going to do parts of the cash flow, not the entire cash flow, but I encourage you to do your operating activities, your investing activities, do the calculations on the fixed assets, fixed deposits, and then come also to your financing activities. And then I'm going to do with you financing activities Here it is. Here is your financing activities. I'm just going to do the changes in shares. Okay. It's very important that you know how to prepare note 7 and note 8, because these notes are possible to be coupled with a statement of financial position or with a cash flow statement. I've not seen a paper where these notes are missing. So you have to know these particular notes. So let's see what it says here. We're given the 26,250,000. There it is over there. And then it says, on the 1st of May 2021, the directors issued a further. That simply means these were not shares to be issued from the start. These were not the initial or the first shares to be issued. This is a further 2 million. So I'm going to leave the first block blank. I'm going to come here. I'm going to say 2 million ordinary shares has been issued here. Ordinary shares. And these were issued at 2 Rand 75. At 2 Rand 75. So it's going to be a 2 million times 2 Rand 75. If I can have your calculator, how much is that? 5.5 million. 5.5 million. Like that. 5.5 million. Okay. The next one. 30 November 2021. 500,000 ordinary shares were repurchased. 500,000 ordinary shares were repurchased from a disgruntled shareholder at 25 cents above. Above comes to my retained income, 25 cents. My average price comes here. And here is my cash flow statement amount. Okay, so these shares are repurchased. I need the average price because in note number 7, I recorded the average price. Do I know the average price? I don't know. So that means I have my beginning, addition, repurchase, balance at the end. So I look at the B closest to the R. Okay, I'll say it again. If you are struggling to get your average price, you look at the B that is closest to your R. So the B that is closest to your R is the balance here at the end, not at the beginning. So I'm going to take my 26,250,000, then I'm going to divide that by 7.5 million, like that. And then that's going to give me an average price. And the average price is 3 Rand 50, like that. 3 Rand 50. So I'll come here, then my average price is 3 Rand 50. So I'm now going to say 25 cents plus 3 Rand 50 gives me my cash flow, which is 3 Rand 75. But in my note 7, I need the average price. That is what goes into note number 7. So I'm going to say here, repurchased at 3 Rand 50. So it's 500,000 times 3 Rand 50. And I know my brackets must be in there already. Brackets. 1,750,000 is what I get here now. Bottom up. Okay, so we're going to calculate from the bottom, going all the way up. Now, I need you to have your calculator because I need to show you how to flip the signs because today, my calculator. Okay, let's do it together. This is what you say. You ready? Here we go. You say 26,250,000, 26,250,000. Then this 1,750,000 is a negative. But when we go up, we flip the sign. We do the opposite. So it's going to be 26,250,000 plus the 1,750,000 plus the 1,750,000 minus the 5.5. So already now you know. You're going to subtract the 5.5. How much you get? Say it again. 22,500,000. 22,500,000. Okay, these are ordinary shares at the beginning. Okay, so here we're going to start from the bottom and we're going up. So we're going to say 7.5 million. Again, when we go up, we flip the sign. 7.5 plus the 500,000. That gives you 8 million. Minus the 2 million. That gives you 6 million. 6 million over there. 6 million ordinary shares at the beginning to give you 22.5. Let's come now to the cash flow statement because we're doing this to see how much can we take to the cash flow statement. So tomorrow, if such a question comes, after you do your note, you quickly come to your cash flow statement. Let me show you how to record. Proceeds from shares issued. You need to show calculations that when your teacher is marking, they can see this is what you did. So you say, proceeds from shares issued. How many shares did we issue? We issued how many? 2 million shares. We issued 2 million shares. At what price? 275. How much it gave us? 5.5 million. Inflow, outflow. Obviously, if we issued shares, we sold shares, money came in, cash inflow. No bracket. Then, shares repurchased. Shares repurchased. Already you know, once you hear repurchase, bracket. Straight. Once you hear repurchase, bracket. Then what do you now say? You now say, how many shares were repurchased here? 500,000. Then you multiply that. Is it by 25 cents? No. Is it by 350? No. By the 375. By 3.75. And then you end up with your 1,875,000. But the examiner can play around with these calculations. All right. So you must be able, at times they give you the amount in rands, not 25 cents. Not 25 cents at all. Maybe they give it to you in rands already. They give you the full amount, not per share, but the full amount after the repurchase of shares. So you must be able to do that as well. Next one. Oh, this one, a very interesting part on the cash flow statement. That is the cash and cash equivalents. How do I get the cash and cash equivalents amount? So in 2021, this is the beginning. 2022, this is the end. Okay, so opening balance, closing balance. We good? Okay, so we come here, cash and cash equivalents, opening balance. The one trick that most examiners keep trying is to bring the bank overdraft. Come on. This has been there for years now. Once they bring a bank overdraft, they simply say they want to see, do you know how to subtract the bank overdraft? So always start with the cash and cash equivalents, 72,000. Like that. Then come and minus, subtract. What do you subtract? Your bank overdraft. How much is that? 147,500. Let me see your calculators. Punch in 72 for me. 72 minus 147,500. How much you get? Thank you. Negative, not just 75, a negative 75,000. So it's a negative 75,000. Negative 75,000. And then you go down. On your calculator, you say 177.5 minus 75,000. 1 or 2. Easy. Same 1 or 2. Okay? So that's it. We good? Or you want us to do one more? Okay. Someone is saying, Mr. Simbi, please let's just do one more so I can get a bit of understanding. Let's do one more then. You know what? Your wish, my command. Your wish, my command. Let's do one more. And it's in November 2024. Okay. So 2023. What do? I open my bracket. Do I have cash and cash equivalents here? Yes. How much? 36,000. So I come here, I say 36,000. Before I do anything, I have to check. Do I have bank overdraft? Yes. How much is that? 142,680 minus 142,680. I close my bracket. And I need you to tell me on your calculator, how much are you getting? Thank you. A negative 106,680. A negative 106,680. A negative 106,680. And then clear your calculator now. Clear your calculator. Okay, now you say 296,460, 296,460 minus 106,680. 106,680 minus. You can end up with what? 189,780. That's what you end up with. You must prepare. At times the examiner wants you to calculate from the bottom going up. So you have to know that whenever you go up, you flip the sign. So you'll be saying 189,780 plus 106,680. That's why it ends up giving you a positive 296,460. Oh, I had to put a plus so you can see it's positive. But you catch the drift, isn't it? Okay, so when we go up, we flip the sign. And therefore, it's 189,780. And we add the 106,680. That's why we end up with 296,460. Beautiful. All right. Before I say my goodbye, let me just touch major shareholding. And then I'll be on my way home. Major shareholding refers to the ownership of a significant portion of a company's shares by an individual. For today's lesson, I'm going to be doing 51%. Okay? There are several ways, 51% or 50% plus 1, 50% plus 100. But for this lesson, I'm going to use 51%. And the question is, Denise Taylor, the CEO, owned 540,000 shares in the company on 1 March 2022. 1 March 2022 is the beginning, the start of the financial year. She continued to buy additional shares on the JSE at various times during the year. On 28 February 2023, this is now the end of the financial year. Denise became the majority shareholder as she then owned 51% of the shares in issue. Required. Calculate the total number of additional shares that Denise purchased. Give one possible reason why Denise was determined to become the majority shareholder. You can see in the recent papers, it comes with questions that speak about rights issue. All right. So when time permits, maybe right at the very end, I'll touch that if time permits. Okay. And then, so we come here now. We're given this information. Okay. On 1 March, which is the beginning, at the beginning, the company issued an additional 300,000 shares. So we don't know how many we had at the beginning, but we know that additional shares were issued, which is 300,000 additional shares that we now have at the end, 1.5 million. So how much is at the beginning? How much is at the beginning? You do the opposite. If you have 1.5, you're going up, it's a positive 300, so it becomes a negative. So it's 1.5 minus 300. So you end up with 1.2 million at the beginning. So she owned 540,000 shares at the beginning. All right. And now she has now become the majority shareholder, where she now owns what? She now owns 51% of what? Of the 1.5. So I just wanted to show you something. That at the beginning, she had 540,000 shares that she was owning. And at the beginning, there's 1.2 million shares in issue. You multiply that by 100 over 1. You can see that she owned 45%. So she was not a majority shareholder. She had to buy shares for her to now have 51%. How many shares did she buy? Because she now has to own 51% of the 1.5 million shares, which gives you 765,000. 765,000. So which therefore means if she now owns 765,000 shares, now at the end, yet at the beginning she had 540,000. How many shares has she acquired during the year? The difference between the two is 225,000 shares. So she has acquired 225,000 shares. You will see that other questions go on to ask you to calculate how much she paid. In other words, you're saying 225,000 shares. You then multiply by the issue price of the shares. So you have to look at such calculations. Give one possible reason why Denise was determined to become the majority shareholder. She wants to have full control of the company. She wants to influence decisions in the future. She wants to address the issues of incompetent directors and influence the appointment of new directors, so then she can contribute to the growth of the company. She feels she can kickstart a turnaround of the current situation. And then my bag is packed up. I'm about to go, but can I go without saying a bit on financial indicators? Certainly not. Okay, so in your exam, normal standard, you have to be able to calculate financial indicators. I've said this from the onset of today's lesson, and I've done an impressive two full lessons where I did calculations on financial indicators on this very same class. After this class, if you have a problem with financial indicators, I can direct you. You can go and find these lessons on this very same portal, and then you find where I did financial indicators calculations, and I also did a full session on the analysis and interpretation of financial information. So you have to know your profitability, your solvency, your liquidity, because at times the examiner comes and says, comment on the liquidity of the company. Then you have to know which financial indicators fall within the basket of liquidity. And then your return financial indicators, where you have your share, your ROTCE, and you have your EPS, and you have your DPS, you have your net asset value per share, dividend payout rate, and then your financial risk and gearing, and we're talking debt equity ratio. Now, how to navigate your formula sheet, okay? So by now you should have done this, because I've been showing this again in this class 1,000 million times. So I just want you to feel left out if you're joining us for the very first time. You must really feel left out that I've been teaching this all this time. Okay, so you must know, here's your profitability, here's your liquidity. All right, so the names of our financial indicators, you can find them here. For example, this one is your solvency. All right, is your solvency here, the solvency, and this is your acid test here. This is your acid test here, where you have your current assets minus stock inventory as to current liabilities. All right, and then all these liquidity financial indicators. All right, and then you have your return financial indicators, and the longest one, that's your ROTCE. All right, the longest one is your ROTCE. Okay, so I'm not going to calculate financial indicators, but I'm just going to comment on one or two, and then we say goodbye. Okay, so whenever you are commenting on financial indicators, like I said, there's 2 full sessions where I did these financial indicators on this very same class. You can find them on this page. And then when you do these ones, you need to quote financial indicators. That's number 1, the name of the financial indicator. You need to quote the trend with figures, and you must also give an explanation. All right, it says dividend payout policy. Okay, so this has been one of the most common questions that comes in most papers. All right, and this one says, comment on the dividend payout policy of the company. Explain why this is a responsible change in policy. Provide 1 point. So in 2023, the dividend payout rate was 86%. And the dividend payout rate has now changed to 60%. The change in the dividend payout rate speaks or indicates a change in the dividend payout policy. Because once you see the rate changing, it's telling the new direction that the directors are now taking. Okay, so let's now comment on this. Comment on the dividend payout policy of the company. Explain why this is a responsible change. I'll then say, the dividend payout rate, has, what do we see here? It was 86, now it's 60. Did it increase or decrease? Has decreased. It has decreased. It has decreased from 86% to 60%. It is decreased from 86 to 60%. by 26 percentage points. Once you get the difference between this, you cannot call it 26%. That is incorrect. It's 26 percentage points. The word points must be included. Otherwise, you're getting marked wrong. Okay, that's my first point here. Then, explain why this is a responsible change. In 2023, the directors paid 86% of earnings as dividends. That simply means they were retaining 14% of earnings as dividends. That's what it means. In 2024, the directors are paying 60% of earnings as dividends. Therefore, they are retaining 40% of earnings, retaining to keep. Why is that a responsible decision or a responsible change? You can see that the funds retained will be used or can be used for future expansion. So the funds can be used for future expansion, as well as retaining funds helps to protect the cash flow. It helps to protect the cash flow of the business. It helps to protect the cash flow of the business. I know you can have other answers that you can also put in. All right, and then the next one. Okay, so this is me commenting on the dividend payout. There is a number of questions that can be asked on this thing. Please go and check them out and also know how to calculate the dividend payout rate. Obviously, it is your DPS over EPS. Okay, let's go on to the next one. Explain whether the shareholder should be satisfied or not with the earnings per share and returns on average shareholders' equity of the company. So this is earnings and returns. Explain whether the shareholders should be satisfied or not with the earnings per share. All right, so let's start with earnings per share. Should the shareholders be satisfied or not with the EPS? What do we see on our EPS? Our EPS has increased from 104 to 112 cents. That's a good thing. They should be satisfied with this one. Okay? Because how do we calculate earnings per share? It is your net profit after tax over the number of shares. So once it increases, it is also speaking to profitability, that the company is making good profit. 2 points. So let's start with point number 1. EPS has increased. 2 minutes, we say goodbye. Has increased from 104 cents to 112 cents. By how much? By 8 cents. That's a good thing. Once earnings increase, shareholders are happy. And then this attracts potential investors as well. So this is good. EPS has increased. And also you need to know that an increase in EPS indicates to profitability. So shareholders must be happy. Shareholders should be happy. Shareholders should be happy. They should be happy as it shows an increase in the profitability of the company. In profitability. That's a good sign. Okay, now let's go on to the next one. Earnings per share and returns on average shareholders' equity. Return on average shareholders' equity. That is your ROCE. This is your ROCE here. So you will see in other papers they actually say ROCE. In others they say return on average shareholders' equity. Others, they say ROTCE. But so you have to know, if it says ROTCE, that's return on total capital employed. If it says return on average shareholders' equity, that's ROSHE. So you must expose yourself to how they write out these financial indicators. ROSHE, return on average shareholders' equity. ROTCE, return on total capital employed. Okay. What do we say about our ROSHE now? Let's come. Point number 1 on our ROSHE. We say that the ROSHE, what has happened here? It was 11, now it's 20. That's an increase. ROSHE has increased from 11% to 20% by 9 percentage points. Aha! Don't forget the word points. 9 percentage points. Okay? Next point. The moment your ROSHE is higher than alternative investments, they either say interest on fixed deposit or they say alternative investments. Alternative investments. The moment we as a company are giving a higher return, alternative investments like the banks, like the fixed deposit, our shareholders must be happy because here they're getting a good return of 20%. Yet alternative investments are giving them what? 7.5%. So I'll come here, then I'll say, my point number two is our ROSHE is higher. The ROSHE is higher than alternative investments, but in this case they said interest on fixed deposit. So you quote interest. So you quote interest on fixed deposit. Okay, which is giving only 7.5. So ROSHE, which is 20%. So the shareholders must be happy. All right. And then lastly, explain how the decision affected the risk. This is when the company borrowed a loan and then they also issued shares. And then I'm going to leave this one as my time is up. I have already exceeded the time that I was supposed to have done. And then I want to encourage you to go and check your auditing and corporate governance. So you need to go do an auditing, 3 different types of reports, your qualified, unqualified, and the disclaimer, and how it affects the company, how it affects the reputation of the company. Corporate governance, you need to do your corporate governance. You need to go and study. When I talk about corporate governance, there's a lot of things that I can talk about. You need to know the roles of your directors. You need to know all the information that comes into corporate governance, your corporate social responsibility. You need to know all the King Code. You need to know a lot of things that come into your corporate governance. I hope you have been preparing for this, and I hope you have been studying so that you can be able to answer questions as and when they come. My good friends, we've come to the end of today's lesson. I know it started a bit late, and my calculator refused to come to the party today, but I promise you that on Tuesday, on the 3rd of June, exactly at 2:30, I'll be sitting here waiting for you so that we can prepare for our paper 2. I'm excited that you guys joined today, and I'm excited for tomorrow. Tomorrow, make sure you wake up early. Go to the exam venue on time. Make sure you have your calculator, you have all the required stationery that you need. And you get there early, on time, in a complete school uniform. And then, when you read your question paper, it's answer book, question paper. Read them together. Understand what the examiner is saying. And then apply yourself. I think you have done so well. You've been preparing, you've put in the hours. And I have no doubt that tomorrow is going to be a brighter day. It's going to be a good day because you deserve nothing but the best. So let me say my goodbyes and I see you next week, Tuesday. 2:30, I'll be here waiting for you. Please do tell your friends to tell their friends that Mr. Simbi will be doing paper 2 revision again at 2:30 up until 6 o'clock. Until next time, enjoy your studies. Don't go to bed late. Make sure you go early so that you can write the exam comfortably. All the best for tomorrow and goodbye.